Assalamu alaikum viewers, welcome to a video on what is Islamic finance. So I'm this short video, a few minutes, I'm just going to try to declutter to you what Islamic finance really is. We all know that riba or interest is haram. We've heard about that. That's pretty much all what we know about Islamic finance, that it's interest free or it's something to do with that makes interest haram, and that's all there is to it. It's true, but also not so true because there's a lot more to it. What really is Islamic finance? It's basically understanding the various contracts through which we could do financial activity in Islam, what Islam permits, what the Sharia permits. And interest comes into play here because when we talk about contract, the typical loan contract that we know about, which is interest based, the conventional form of finance is only one type, which is an interest-based loan contract. If you need money, if you need 1 lakh rupees, I'm going to give you a loan at, say, 10% per annum interest. So you'll return back 1,10,000 to me, maybe in one shot or spread over 10 EMIs, whatever the case may be. But that extra 10,000 is riba or interest, and which is haram. And Allah expressly prohibits it in the Quran, and as well as various hadiths talk about the extreme sin of taking interest. It's not only forbidden to take interest, it's forbidden to pay interest, to witness an interest transaction, to record it, etc. So this comes in through a loan contract which has interest specified. So the Sharia also forbids excessive uncertainty, which is called gharar. It also prohibits gambling in the contracts where you pay money and it's you either win or lose. One side always loses. So these type of contracts, these type of conditions or features in any contract, financing contract, would make it haram. And that's why you're not allowed to do stock market options and futures, because you don't know what's going to happen in the future. Okay, we'll talk about the stock market, etc., in future videos from a Sharia compliant perspective and clarify your issues over there. So when you talk about Islamic finance, we're really talking about what are the permissible financing contracts. Whereas conventionally, there's only one way, which is loan contract. Whereas in Sharia, we have 4 types of ways of doing finance. All 4 ways would be halal as long as we understand how they could be done. The first is a loan contract, again, which is I give you 1 lakh rupees as a loan, but I can only take back 1 lakh. I can only take back the principal. I cannot take another rupee of interest, because that, even if it's a rupee extra, that is haram, that is riba. So this is an interest-free form of a loan, and it's also known as qarz-e hasana, because I'm doing a good deed by giving you this qarz, which is an interest-free loan. I'm helping you out by not taking back anything, but that's the only way I could give you a loan. I can only take back the principal. So obviously you can't do it as a commercial form of enterprise. It's more social, helping type of activity, very rewarding. So that perhaps you all know about that. But what are the other 3 forms of Islamic finance? And these 3 forms, the financier can actually charge a halal profit for doing this form of finance from the one who's taking the finance, right, from his customer. So the first one would be equity form of financing contract, which is a form of partnership where I give you, I invest in your business venture. It can also be a partnership in an asset where I invest in say, for example, the house that you want to buy. I become a partner in your house, and you pay me rent for the share that I own as a financier, and you keep buying my share over time through EMIs, and your rent that you have to pay me will also reduce by the declining ownership of my share. Or if I'm a business partner, it's a simple business partnership, which we share the profits in a pre-agreed ratio, and we own the business in a pre-agreed as per the capital contribution. Another form is called mudaraba. This is the partnership finance is called musharaka. The other version is mudaraba, which is like a venture capital type of contract, where the financier is known as a rabul mal, and he's basically the investor in the business, and the entrepreneur runs the business, and they share profits in a pre-agreed ratio out of 100%, 30-70, 50-50, 60-40, whatever is pre-agreed between them. And any losses in the business is borne by the financier. So that is equity type of finance. The third form of finance is through trade-based form of finance, where you structure the contract in the form of a sale, where in a sale there is a seller and there's a buyer. So, for example, if you look at the wholesale market, you have wholesalers who buy it from the manufacturers, and they sell products to the retailers. So similarly, if you want to purchase a car from an Islamic bank, or just say, let's say a finance, somebody who has money, you approach them and they also want to do financing as per Sharia norms. The car is, say, 10 lakhs. And they have 10 lakhs with them, but they don't want to earn money in the form of interest. So you could say you buy the car for me and then you sell it to me for, say, 12 lakhs. And I'll pay you 1 lakh a month for 12 months. So in 1 year, I'll repay the 12 lakhs to you, and the 2 lakh extra is your profit. Like a wholesaler charges a markup from a retail to a retailer, and a retailer charges further adds a markup, a profit to the product he sells to the retail customers. So this is called murahaba. And there are many versions of the sale-based contract in Islamic finance, but this is for this video, this is an example I can mention. It's the most popular version of it. So yeah, there are two prices for any product. Can have two prices. One could be the spot price, and one could be the deferred sale price. So you could buy a mobile phone, for example. The spot price is 10,000. I can also sell it to you for 12,000, 1,000 rupees a month for 12 months. Both are permissible, but the customer needs to choose which type of sale he wants, and based on that, the sale is done. So I'm allowed to charge more if I'm giving you time to pay. The fourth version of Islamic finance is what's known as leasing or ijara in Arabic. To understand it simply, it's a form of rentals. So when we rent our apartment, that is an ijara contract, but that is an operating lease because we take back the apartment after 11 months or 2 years or 3 years. The contract, when it expires, when the tenant leaves, the tenant or the lessee leaves, the asset is returned back to the lessor, the one who owns the asset. So I charge rent. If I can rent you a car, I can rent you a machine, and then take it back at the end. So this is also a form of finance. But the more popular version is what's known as finance lease, where the lease ends in ownership. So you lease, say, a machinery from me, which I own, and I lease it to you. You lease it, say, for 3 months, pay me a monthly installment, which is also rent and part purchasing the asset. So towards the end of the lease, you paid me what I need, and I then sell it to you for a small amount or gift it to you at the end of the lease. So, the ownership is transferred to a separate, either a gift contract or a small token amount sold to you. So in a nutshell, I know it's quite dense, quite a lot to digest, but this is Islamic finance in brief. I hope this video helps you declutter what Islamic finance really is. Thank you.